everyone, welcome yet again to Mutual Funds. Sahi here presents Smart Nivesh, Sahi Nivesh, partnered by Times Network. I'm Kavita Thapliyal, and as part of our commitment to making investing easier and empowering you to take charge of your financial future, we bring you expert insights on different facets of financial planning. And today, we are diving into a topic that's close to the heart of many: buying a house. Yeah. Owning a home is a significant milestone for most individuals, and setting the right goals is key to making this dream a reality. But how do you navigate this complex process, and how can you align your financial strategies to achieve the same? To help us unravel this mystery, we have two esteemed experts joining us today.
Ashutosh Limay, Senior Director and Co-Head Strategic Advisory and Valuations for Anarok, and Harsh Rungta, Founder of Fee Only Investment Advisors.
All right, Ashutosh and Harsh, welcome to this very special edition, and we are going to help our viewers plan a house purchase. A very crucial dream for almost all of us. Okay, let's start with the basic question. When you think, or when you are planning to buy a house, what exactly should you be keeping in mind in terms of areas? I mean, obviously the budget concerns are there. I mean, that is something that you really need to work much in advance by having a financial plan. But apart from that, what all you should be keeping in your mind before buying a house?
I think the first and foremost point is whether it is for self-use or for investment. Let's focus on self-use first, because that's a need. And when somebody is planning for a self-use driven purchase, 3 points are crucial. First is about the location.
Sure.
So location involves your work commute patterns. So your work commute remains the first and foremost point.
Sure.
Second could be in terms of the space that you want, in terms of the area. So whether it's a small house at an established location or a bigger house at a less established location, given the budget will be fixed.
Right.
Also whether more smaller rooms or fewer larger rooms. That depends on the lifestyle of that family.
Exactly.
And the near term family plan, whether they are going to start the family, if there are kids in the family, if there are parents, that will depend on that. And thirdly, about amenities. So if the project or the location is yet to get established, there may not be social amenities outside the premises.
Right.
So these three factors, location, the space, the size, and the amenities.
Okay, interesting. And depending on all of these factors, Harsh, your budget is decided, and so is your financial planning, and so is the amount on which you will be taking a loan. So how do we actually plan buying a house financially?
So I think all the parameters that he mentioned are extremely important.
True.
But the point is that should you buy it all? Okay.
Okay,
Right.
let's begin with that. Yeah, sure.
Those parameters are important, but
Sure.
those parameters are important for staying, right? This
Yeah,
is
for
taking for
self-consumption.
granted that you
Right.
want to always stay in an owned premise.
Right.
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 I think that clearly is open for debate
Discussion.
and discussion today, especially given that buying a house is a long-term commitment. The
Totally.
transaction charges are extremely high.
Yeah.
Those are one time. I mean, you pay stamp duty, registration, all kinds of charges. You don't get value for that. People are much more mobile today. They are mobile across cities.
Yeah,
They are
yeah.
mobile in their careers.
Yeah.
So when and buying of a house, timing that. Okay. So
Is
I
very
am of the
crucial.
camp that at some point of time you would want to stay in your own home,
Okay.
but it's a very major part of your overall financial future.
Exactly. You'll be tied to a loan for a very long period of time then.
Absolutely.
Yeah.
So you need to time it properly.
Okay.
So I think you need to de-link the usage parameters. These are what I would say are usage parameters
Sure.
with the buy parameters. I
Right.
think the buy parameters would depend on, do you have a long-term commitment to the city? Does it look like you're going to be staying in this city for some time? Do you have a stability in your career?
Career.
You, your spouse, okay? I mean, typically today both people are working. So I think unless that happens, putting up that kind of money may not make sense.
Right.
Also, you need to see it in conjunction with your other goals, because this is a big goal.
Exactly. It's a big goal.
But your children's education, your own retirement, now everything is a big goal, right? by preponing or let's say accelerating the purchase, which is what social pressure to own a home
Yeah.
does.
Yeah,
Okay?
exactly.
कि सबसे you do buying the home first because वो करना ही है.
Yeah.
Yes, करना है, but आज क्यों करना है? Okay, so I think this is something that needs to be seen, and it has a huge impact because moment you take such a high value purchase right at the beginning of your career, all that you are doing is that on that much money, actually paying interest, which is reverse compounding, versus if you were to invest, and I am not saying that is better, I am just saying consider it. So there is no right answer to whatever I am
It
saying.
all depends to what is, depending
Absolutely.
on what your needs and
As
what
long
suits
as
you.
the decision is conscious, I think that is what I am advocating, that
Sure.
take a conscious decision on timing the purchase. At some time you should buy your own home. At least I am in that camp.
Okay, so Ashutosh, one point is very clear that if it is for self-consumption, only then it is an investment for you. Now, how do you plan this investment? The buying parameters we already discussed. Let's talk about the loan-taking parameters. Now, how should one come to that decision? Assuming that this is a house they have taken for, they want to buy for self-consumption, it's an investment for them.
So usually buying a house with a home loan is a good idea because now the home loan rates are competitive and there are tax benefits also. Having said that, one has to always prepare for the initial amount that one needs to pay upfront. About 20% is the market norm of the house amount needs to be paid upfront. Then there are certain thumb rules that the financial institutions will follow. So typically about 80% of the total amount one can get as loan.
As loan, true.
Also, if somebody does the pre-qualification work ahead of or simultaneously of property selection, that helps because depending on your credit worthiness, your income of your household, etc., you will know that your eligibility is up to a certain level. So that helps you in searching the house as well. Comfortably about 5 to 6 times of the annual gross income of the household, that's the house price that one should look at in terms of purchase price. And in terms of EMI, I think comfortably less than 50% of the net take home. That is when the household will be comfortable in my view while paying the home loans interest, so to speak. So I think preparing oneself with the financial capability, both in terms of the upfront amount to be paid and the credit worthiness driven the total eligibility for the amount, that's one. And second is to be comfortable with the EMI proportion. So those are the points that the prospective home buyer should be ready with.
All right. A very important question that usually people ask us a lot of time is how to strike out a balance between paying off the loan and also starting the investment. As you already mentioned that this is going to be a very huge purchase for you, and if you're doing it at the very beginning of your career, you might just stall the rest of the investments and rest of your financial goals. Now, how do we strike that balance? Because you want to buy that house and early stage of the career you will pay as much as you can, right? But at the same time you do have financial goals. I mean, it doesn't stop there, right? You have to think about, because your life upgrade will be happening and you will be experiencing other life stages in your life as well. So how can we keep a very big loan chunk in place and also have an investment separately going on for other financial goals?
So I think if you have done the initial planning well, then the loan is part of the plan.
So when you say initial planning, what does that involve?
So it involves the entire frame is all your goals. In that, buying your home is one frame, one part, right? Your children's education, if you have children. So it is one part, right?
Writing down all your financial
goals. When you write down that, I think it will make itself clear when you can actually afford to buy a home that you can stay in. I mean, it's very simple. If you stay in Bombay, and people like to stay close to where they commute, but they may not be able to afford. Rentals in India are very cheap. Buying those outright is very expensive. So today, for example, if taking on rent close to my office will make sense, and I can postpone my buying because I can invest that money, okay, and maybe over long periods, when I'm more stable, when my income becomes larger,
Then you
okay,
can
then
look
I
into
can
that.
buy. And one of the goals for which this money is being invested is to buy a home, right? Also for creating a corpus for my children's education, creating a retirement corpus. Your recognition as having arrived, okay, depends on whether you have bought a home or not. It does not matter that it is bought with a large loan. There is a famous saying that if you don't like your job, wait till you have a home loan. You'll start loving your job, right? So basically, I think why would anybody do that unplanned? And if you have planned it, then loan is part of it. Plan this well.
Right.
Don't see home purchase in isolation.
Isolation.
Okay, of your other goals. It's part of your life, very important part of your life. Time it well.
Let's talk about real estate prices now. I just want to compare the pre-pandemic and post-pandemic phase, which has been great actually for the real estate sector. So are we expecting price rise continuing? This momentum should be going up according to your analysis. What do you say?
Yes, we do think that prices will go up, but the prices will go up with fundamentals in place. It is not about sentiment-driven price increase. It is about a reason-based price increase in terms of. So what I mean by that is the price increase will be linked to inflation, will be linked to the expenses that the developer is making, etc. So inflation plus a certain delta. The industry is much more mature. The industry is much more organized, which means that the price movement will be linked to economic fundamentals rather than sentiments. In housing, sentiments also play a role, always they do, but earlier we have seen sentiments playing a larger role than the fundamentals. No more the case. It is the fundamentals that will drive the pricing. Prices will go up, but that's something which will be within the affordability range of majority of the population.
Sure. You are right now living on rent, okay? You thought that you will be maybe having your own house whenever you have the financial flexibility or whenever you have that stage in your life planned. How do you maintain that discipline to not to take out money from the kitty that you have accumulated for your home loan or for your house purchase, because your life is growing, right? I mean, you're going ahead with your life, you have life stages, you have a family, you have kids. It's quite possible for you to just take up money from there and just use it for some other financial goal.
So absolutely, you are right. Expenses, grow to, meet the amount of income available.
Exactly.
So if you don't sort of preempt it, okay, by having an EMI, okay, if you don't preempt it by having an EMI, you're likely to spend, right? But another way of preempting is to do this famous SIP, right?
Sure, yeah.
Make sure the SIP happens like the EMI. What does EMI do? Okay. The EMI comes and debits your account. So does a SIP. So treat the SIP as an EMI. And if you don't have the discipline, sure, take the compulsory debit that comes from EMI. I mean, it carries costs.
It carries costs.
So your lack of discipline, as long as you recognize that your lack of discipline carries cost, I think it's a fine decision. But as I said, SIP is an equally valid way of doing the same thing that an EMI does. And I think that is much more powerful in the long run.
So we can call it khushiyon ki EMI. The SIP that you will be doing for your home, it can be a khushiyon ki EMI. So the same question to you. Do you agree with this idea of living on rent till the time you are mentally prepared and financially prepared to own a house? Because this has been a long going debate, definitely.
Yeah, I do agree to that extent that it is up to the individual or the couple to decide what they want to do in life and when do they want to block a huge capital and want to take a loan if they want to. So it's that couple's decision or individual's decision. Living on rent is much more easier than earlier. Now the regulatory or the legal systems facilitate rental living. Also, the young workforce is much more mobile, as Harji was mentioning. So you live on rented accommodation up to a certain point, but a time will come that people will buy a house because of some other factors that it helps if you have your own house from stability perspective, family perspectives, etc. So, and that is my point, that when that individual or couple or family is comfortable and confident that we have enough finances now, we are clear that we want to buy it then itself. Don't wait for the market.
Sure.
It's rarely that you will get to time it. Property cycles come and go. So you will get another chance of selling your house, buying a new one, upgrade yourselves or change the location, whatever. But if one thinks of waiting and timing, despite being ready and confident about the decision that now we need a home, I think they should buy then and not to wait for timing. It rarely happens.
Sure.
If you are lucky, it will happen, but
Sure.
it's no point trying to keep timing it.
All right. So now let's accomplish this dream by investing in mutual funds. Okay. A typical time horizon to buy this dream house of yours, what should that be? You know, if someone has this goal coming up, maybe planning to buy a house in next 2 years or maybe in next 10 years, definitely the approach will differ. But it depends what's the investment amount that you're planning to put in. So what all factors should we be keeping in mind, and how mutual fund as a vehicle should be used?
So I think mutual fund is an excellent vehicle for any kind of
Sure.
investment, right?
Sure.
As you mentioned, there can be the differences can be the kind of risk the investor is able to take. That could be one. The period, it could be 2 years, 5 years, 10 years. Okay. The resources that they have. Okay, because if the needed resources and existing, if you have enough resources, then even though you may have risk-taking ability, even though you may have time, you may choose that I have enough. Okay,
Let's do it now.
I will play safe. It is like, you have time to reach a destination. You are a driver who can drive fast, but because you have enough time, okay, you may choose to drive at a steady rate.
Sure.
Okay, you just play safe,
Okay.
right? Obviously, shorter the period, other things remaining the same. Shorter the period, okay, more will be the steadiness quotient in your mutual fund investments.
Okay. For
So
example,
for example, if it is 2 years, you need a lot of fixed deposit type debt or liquid type of instruments. So and
Fixed income.
So that will be predominant. I mean,
just to give stability to your corpus.
because you need that money in 2 years. Okay, and 2 years is too short a time to take volatile. If you're very, somebody who takes a high amount of risk, maybe you can add a 5-10%.
Some amount of that
Some
money
amount of tadka you can add to that, but otherwise, by and large, this will be nice and steady. Moment I think it goes 5 years or so.
Exactly, yeah.
Now you have play. You can play, equity savings. Okay, equity savings would have typically 20-25%, 30% equity, 70-75% debt component. You can do balanced funds, aggressive hybrid funds. You can do balanced advantage funds.
Right.
Okay. Moment you have 5 years. Moment you have longer than that,
More than
you could
5.
look at equity funds and active equity funds, depending on your.
Is it right to have a goal and assign a mutual fund portfolio to that? Can that be recommended?
Yes, but I think
the
overall
resources kitty
should
is-
also be seen.
Okay,
Overall risk. So to answer your question, if I am taking more risk in my house goal, okay, and if that is more than my my standard, okay, then I must compensate that somewhere else.
Right,
Because end of the day, money is money, right? I can shift from one goal to another.
Sure.
We have just made these money boxes, right? So it's good to make a money box because it gives that sense of direction.
Exactly.
So it's good to make a money box,
Yeah.
but one must remember, money is fungible.
Yeah.
Okay. So if you've taken high risk in one money box, compensate for that somewhere else. If you have taken low risks in one money box, compensate with a higher risk in. So again, the whole idea is always look at an overall picture. Never look at an isolated picture. That really is the point.
All right. Do time it well and make the best use of mutual fund as a vehicle to accomplish or fulfill this particular goal of yours. Depending on the time horizon, you have all the options in mutual fund to invest if at all you want to buy a house. Thank you so much for being on the show, and it's a wrap from my end also. Thank you so much for watching. Goodbye.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.